I do want to begin with that big boost to the buyback, a sizable boost, $25 billion. Walk me through the logic behind that, Chuck.
Yeah, first of all, Jonathan, it's good to be with you. Thanks for having me today. And if I might, just quickly, we had a really great quarter, and I'm proud of the innovation pipeline we have. Obviously, we'll talk about the balance sheet, but I also have to call out our team who is executing incredibly well right now. When you look at the capital structure that we announced yesterday, as we've talked about repeatedly, we're not a capital-intensive business. We don't spend a lot of CapEx on an annual basis. So we had said the three areas that we would focus on as we got tax reform would be, to reduce our share count through the buyback, which you saw us announce yesterday, as well as continue our capital strategies of returning cash to our shareholders. We increased our dividend, to your point, by 14% yesterday, and then also left ourselves plenty of dry powder for ongoing M&A activity that lines up with our strategy. And then when you think about the overall tax rate and what that allows us to do, it certainly allows us to continue and even more effectively bring programs to our employees, like compensation programs like one we launched yesterday. We've improved our parental leave programs. And it also gives us the ability to crank up our involvement in local communities as well as global communities around the world.
Chuck, you've been very transparent with me over the times that we've spoken about how capital intensive the business is and ultimately where this money will go. But politically speaking, buybacks, for whatever reason, have got a really bad name right now. Can you tell me why you think that is, Chuck?
Well, I think that if you look at companies and how you can use your capital, we don't build buildings very frequently. So for us, the infusion of the capital to reduce the share count, we think rewards our shareholders, which also include those who hold 401ks around the world, retirement plans, so we think it's good for them. And if you look at the strength of our business and where we are headed and what we delivered on this quarter, from a P&L perspective and an operating model perspective, that really allows us to do things that enhance our employee experience, enhance our communities as well. So those are the things we're focused on, Jonathan.
So, Chuck, I'm going to ask a question that might make the PR in front of you squirm a little bit, but I just wonder whether the America First goals of this administration, given your international presence, are really aligned with the ultimate goals of Cisco and the people you're really accountable for, which are the shareholders. Are those two things aligned, Chuck?
Well, I think when we think about who we're accountable to our employees, our customers, our shareholders, our partners. And the great news about tax reform and the strength of our model right now is that we're able to actually serve all of those quite effectively. So I think the tax reform allows us to continue to not only deliver capital returns to our shareholders, but the strength in our business right now allows us to also give wage increases and do the things that I think were intended by the overall program. Look, anytime you bring this much cash back to the United States and you infuse it into the economy, it's going to be good for the United States.
What kind of thing can we see on the wage side from Cisco, Chuck?
I'm sorry, Jonathan?
What kind of things can we see on the wages side? You talked about giving more back to the employees. What kind of things can we see you guys do on the wages side? A lot of people have reached for the one-time bonus for many of their employees. What kind of things is Cisco thinking about? What are you doing?
Yeah, we're actually, we launched a compensation program yesterday that clearly is salary oriented, that will continue to go into the future for our employees. And again, the strength of the model and the innovation that we drove back into our core and the transition that we're driving into our software business and the recurring model that we've been working on will give us the ability to invest longer term with our employees, and that's our plan.
Okay, so let's move on from that and think about why you did the buyback versus, say, save the money for some M&A. Can I just sit here and assume, Chuck, that there aren't the acquisitions out there that you want right now?
Well, Jonathan, all along we've said that having this cash overseas has not modified or changed or impacted our M&A strategy whatsoever. We've had access to the debt markets. We've leveraged the debt markets to do any deals that we needed to do. And when we modeled out the announcements we made yesterday, you can assume that we feel like we have left ourselves with enough capacity through our cash as well as continued access to the debt markets to actually do any transaction that we think makes sense strategically.
Yeah, and these are some solid earnings, and I just wonder whether there are still some product gaps that you need to fill, Chuck. What are the product gaps you might need to fill?
Well, we're always trying to improve our hand in our portfolio, but I'll tell you right now, Jonathan, I'm pretty pleased with where we are. If you look at there were two things when I became CEO that were really top of mind for me.
Yeah.
Reigniting our core franchises, which we launched this Catalyst 9000 2 quarters ago, and this quarter we announced that it is the fastest ramping product in Cisco's history, and it's in the heart of our core switching platforms. And then this transition to software, which we've been giving statistics every quarter about the progress we're making. So we're pleased with that. We have a pipeline of innovation that we've been working on that you'll see come out over the next few quarters, and that's what leads us to our optimism right now.
So, Chuck, let's talk about putting some numbers on that optimism. Are you still expecting revenue growth to remain in this 3 to 5% range for the calendar year, or can you accelerate out of that?
Well, Jonathan, we only give guidance 1 quarter at a time. We gave guidance for next quarter at 3 to 5.
I know, Chuck, but I'm here to make some news, so I'm just wondering whether that's going to accelerate. What are you looking for, Chuck? Come on.
I don't think my CFO wants me to make any news like that. But look, we are optimistic, and we've given that, and even Kelly yesterday on the call, who is one of the best CFOs in the business, she said that we're optimistic about outbound quarters, but we only guide 1 quarter at a time.